We're very pleased to see you in our ultimate webinar this year, taking inspiration from Spotify and other apps. This year, we decided to do a similar wrapped theme to summarize all the biggest developments thus far this year. And this was a year that was very rich in development. So I think we have a lot to talk about. So brace yourselves, because there's a lot of ground to cover. I'm here with Philip, director at our firm.
Right.
And we have support from Shahir, who's managing this webinar. So the next, you should brace yourselves because we will talk a lot over the next hour or so. We'll cover a little bit of everything that happened in AI, in software, and in IT services, and how the wider development in financial markets and in technology, and in particular in AI, how they translate to M&A, and how basically to position yourselves for next year in terms of personal finance, in terms of capital allocation, in terms of ultimately timing the decision to sell your business. So very important stuff. Without further ado, I think we can jump into the presentation. We'll change the formula a little bit for those of you who have attended our past webinars. We'll try to make it more interactive. We have some exciting polls, and we're very curious to hear your opinions. And also, we welcome your questions, and we'll try to take them as we go, because there's so much going on that we want to keep it relevant to the last things that we've discussed. So what we have prepared for today is 3 themes and 3 areas of our interest that we cover typically. So the first and the most impactful is the developments in artificial intelligence. And we consider the industry more broadly. I do believe that eventually it's going to be a utility, AI, on tap, like water or electricity. So we cover the whole supply chain, including energy and data center development, infrastructure, semis, and the whole ecosystem that caters to the AI industry. The second area we're going to cover is IT services, which is a mix of integrators, software development firms, and consultancies. And lastly, we will talk about software as a service. So the first thing we wanted to cover, probably the most exciting, is what's happening with AI. And the question I think a lot of people have on their minds, are we in a bubble? And actually today, today we were preparing for this webinar, and we wanted some reference for this discussion. So we find a framework, which you see on the right-hand side in this slide, how bubbles develop. And lo and behold, we found that it really resembles the development of AI, our AI index, which covers the whole supply chain to the AI industry since the launch of ChatGPT. So we do see here in 2023 the slow takeoff phase when smart money started to position itself for the coming AI revolution. we did see some sell-offs. The biggest, I guess, was after the DeepSeek announcement in the beginning of 2024. And we do see here a very steep climb about that started around April this year, which has driven the index to to unprecedented records. I don't think there is much doubt in general whether we are in a bubble or not. I think that's pretty much the consensus. I think what is debatable is where are we along the bubble line, let's say, or the typical pattern. Did we hit on the right-hand side the new paradigm peak when everyone believes we're living in a new reality and there are no doubts? Or are we still some way to go? So the way this chart on the left-hand side, let me jump back, starts to develop, it would suggest that we hit the new paradigm kind of consensus in the summer. There was a small sell-off when people came back to offices from summer holidays. So around September, October. A small return to normal, you might think. And then we might follow the further decline. That's one of the scenarios that would suggest this bubble is popping gradually. Obviously, bubbles, they climb different patterns up. So we don't know. We might have some room to go still. So I'm not sure it's a given that it's gonna burst in 2026, but we'll see. I mean, I'm usually conservative, so I have a lot of concern that we might see this blow-off phase happening shortly. A lot depends, I guess, on factors that are not related to AI. Probably about a lot has to do with Fed, because Fed can really extend the runway of the bubble if they dramatically lower interest rates when the new governor is nominated. So, but that we will know only in the spring. So I'm very curious to see what's gonna happen. Philip, you have some thoughts you want to share?
Yeah, of course. I mean, I think it's one of the most interesting points that we have right now. And when we plotted this chart, we didn't know, I think, how it will resemble this line, the red line on the right. And it's very surprising that we had both the first sell-off and new paradigm, and now it seems return to normal. And probably the next couple of months will decide if it's going down and it's the same line is on the right, or it continues to go up, and we're actually on this left-hand side part of the curve. So I think it is a bubble. It's, in my view, it's pretty much consensus across investors that it's a bubble. Just the biggest problem is you don't know how long it's gonna last, so you don't want to lose returns, but also you don't know when it's gonna pop. So everyone is a bit of a kind of difficult position right now, whether to invest or not invest. But the importance in it probably is that this one affects all the other industries that are out there, because the market is just so much concentrated on Nvidia, Google, Microsoft, and all the biggest companies. And kind of what's happening to this line on the left just affects everything else.
Yes. So we want to hear from you. What's your take? That's why we prepared a short poll. We will run it right now.
AI. Yeah. Okay.
It's running?
Would be
Oh,
live.
okay. Okay. I will cast my vote. We'll give you a little bit of time. Oh, I cannot vote. Okay. I have to be
Me neither.
unbiased. Okay. So let's give everyone, I don't know, half a minute to see.
Yeah.
Yeah. I'm very curious. What's the consensus amongst our subscribers and webinar participants?
I see already some results live, but I'll wait for a couple of more people to join in.
Okay.
And we have a minute past, almost 70% turnout.
Oh
So
yeah? Okay.
and I'm clicking finish, and it should be live. So
Oh, very interesting. Yeah. I see. So 2026, 24%, 2027, 27%, later than 2027, 36%. I'm very encouraged by 4 answers. Bubble, what bubble? 12%. I wish I could agree with that. I mean, my gut feeling is that next year should be still, at least the first half, quite okay.
I think there's not much retail participation so far, although we saw today chart from Bank of International Settlements that it's growing. But thinking about the last bubble in software, when the GameStop saga was on, I think we're quite far from that. Maybe we need to see some of the AI companies going for IPO and becoming meme stocks to really feel top of the bubble.
Yeah. I think we have quite a long way to go still. So 2026 should be fine for M&A.
So it's not turn to normal. So this dip here will kind of continue to go up.
I think so. I think we're not at the peak yet. Yes. Which is great news, I think. Encouraging for the rest of the session. Let's move on, Philip, then.
Yes.
To the next subject. So here we have comparison how AI performed against a few other indices of markets we track. So since ChatGPT was launched. So obviously the big winner is AI, the darkest, the black line, more than double the return from Nasdaq, more than 4 times the return of IT services, and the laggard, the problem child, and then the SaaS industry, which is lagging behind all of them. We'll dive deep into all of these, but maybe let's stop and think how why these paths are diverging so much. And I think for that we do have a slide about circular
Circularity.
investments. Yes. So I think a lot of you have seen how money flows in the AI space. It resembles a lot, I think, the closest is the Japanese Chebo. No, so the Keiretsu, yeah, that was Keiretsu, I think.
One of those.
Chebos are in Korea, yeah. Interconnected companies that sell and buy and invest in one another. I think that's what drove the bubble in Japan in the 90s and late 80s. So you have companies that buy from each other and at the same time invest, like Nvidia, who buys shares in OpenAI to fund purchases of Nvidia mm, gear of the chips, which I mean, to me is not a sign of a healthy economy. Mm, because that's not how normal markets work, which would suggest that this is an abnormal state of the economy, and this cannot last for too long. So it's definitely off balance. Mm, I think it can last still for quite a while because there's still a lot of backing and enthusiasm, and the added geopolitical tension that makes people maybe switch their attention from market principles to more strategic and more nation states interests, which drives a lot of it. I don't think it's sustainable. Mm, Eventually, it will stop. It reminds me a little bit also of the Bitcoin companies that issue equity in order to buy Bitcoin, which raises the price of Bitcoin, which then in turn raises their equity prices, and everyone wins until it collapses. Uh,
Yeah, there's
so
like a domino effect when you go down from here, because now is a positive reinforcement cycle, and you invest, Nvidia invest in OpenAI that buys data center from Oracle. So everyone's happy, everyone's stock price rises. The question is what's going to happen when it's something bad,
yeah,
and Oracle's price is down and Nvidia's and OpenAI and so on. There's a domino effect and reverse cycle, and everything just goes down as fast as it went up.
yes. Okay, let's go back to the chart. So that was the about AI performance. Nasdaq, I mean, it's a derivative to a large extent of the AI index because most of the returns are driven by a handful of companies, primarily now Nvidia and Alphabet last year, over the course of last year. But obviously, I mean, since 2022, a lot of companies in the Nasdaq 100 have benefited from the uptick in hardware and software purchases. Then moving on to the IT services, and it has done well. It's a decent return, but hasn't benefited much from AI. And SaaS, I mean, SaaS is, I think there was a point here when it started to go down around 2020, April 2025. And then the performance has been disappointing. But I mean, it really shows that it was super overvalued back in 2022. Mhm. And has not delivered on the expectations that investors had of these companies. So that's how I would sum up what's happening in the SaaS industry. That it just cannot deliver the growth rates that were projected back in the COVID days, in the heydays of
Yes,
SaaS businesses.
it's quite a high base for SaaS companies. So if you think about valuations back in 22 and 7-8 times revenue, and now it declined to 5 times revenue, or stayed there, yeah, when the
Yeah,
company growth rate slowed down, is still pretty good valuation for a lot of companies.
yeah, yeah. Yeah. Okay, this is we're zooming in. What happened this year? Similar picture, although we see that SaaS really declined this year by 9% already. I think we can jump to the next section now, Philip.
No, we have a poll. We have one more poll.
Now we have a poll. Okay, so we summarized each of the sectors, and now the question is whether in 2026 you expect that AI will continue its ride upwards. We will see that IT services take over, or that SaaS companies will finally bounce back. So please make your call, and then we'll sum up.
Yeah, I think given the results of the previous poll, we already can know what's gonna win.
Let's see. I mean, I think IT services are a safe bet. AI is binary. I mean, it's either gonna continue or it's gonna collapse. But if it collapses, it's gonna drag everyone with it.
But then whoever drops the least will win, and that's probably IT services.
Yes, which tend, or SaaS maybe. Who knows? Who knows? Can we run the results?
Let's do 10 seconds more. I see people are still pondering.
Okay.
Thank you very much. All right, we have it. Let me finish. Do you see the
Okay. That was to be expected.
AI 60%, IT services 33%, SaaS only 7%. Not a lot of believers in SaaS. I mean, in comparison to those other sectors.
I think we suggested a little bit the answer, although we didn't suggest or make any statements about AI. Okay, let's move on.